Let's get started with today's webinar, Trading Non-Farm Payrolls, very specific topic. And with good reason, we have this piece of data coming out tomorrow, Friday. Again, the non-farm payrolls comes out the first Friday of every month as a reminder, and we're going to cover some key points, including that one here in a bit on non-farm payrolls. It is typically the most heavily traded news announcement in any given month. And so now that it's quickly upon us here in May, it's definitely worth discussing for a few different reasons. One of them relates to the fact that we are now in what the US Federal Reserve Bank is referring to as a rate hike cycle, okay? And by cycle, meaning we're in some type of pattern of rates increasing, which has created a lot of debate in the United States and around the world, really, because many would argue that the U.S. should not be continuing to raise interest rates. They already have done so once by 25 basis points here early in 2016, and they're meeting again in June, okay, next month. So this non-farm payrolls, the data report it's always important. Every month this piece of data is significant, but this month in particular so far it is of most importance because it's going to shed a lot of light as to whether the Fed can really stand by its intentions of raising interest rates, which we know for the most part they would like to do if they can. They want to stay the course and let the U.S. economy, basically absorb whatever shock might come from interest rates. Of course, uh, they are they will pay attention to the data, right? So they won't blindly continue with another rate hike if the data doesn't justify it, right? So, but basically, what they're envisioning is inflation continuing to rise in the United States, which ultimately will demand the need for rate hikes. Okay, so we're going to talk more about that particular topic as we progress through the presentation. One thing to remember when it comes to trading in general, particularly news events, is that there is risk involved in the market, right? I think most of our clients or all of our clients should be aware of that. And those of you who are new to trading, it's definitely worth reminding you that whenever you get into a trade in the market, whether it's around news events or outside of news events, you are taking on risk. And that's okay, right? As I always like to say when I refer to this point, is that without risk, there would not be the reward that we're looking for, right? We're all trading to make money, trying to make more money than we can earn at the bank or in traditional investments where we have to tie our money up for very long periods of time to see any type of reasonable return. And so that's why we get involved in trading. And a big part of having success is being able to accept the fact that we are taking risk, because there's no way around that, and really trying to understand as best as we possibly can the relationship between risk and reward and how we optimize that relationship. And when we trade around news events, and all of the time, timing is huge, right? A good colleague of mine who's a trader in the markets and an analyst for many years, really try. I like the way he presents because he always simplifies things and puts things into words that I think are. It's not the easiest. It's not always easy to find the right words sometimes to describe the markets, especially when things are very volatile. But he says at the end of the day in trading, there's only two things: there's price and there's time, right? And as traders, what we're trying to do is get in at what we view to be the optimal price on any given instrument and at the optimal time. And so there's two elements involved there. It's the price that we are able to get into any particular position at and our timing. And with non-farm payrolls and with news announcements in general, timing is critical. Okay, and we're going to talk about that a bit today when we go into some tips around news events. And non-farm payrolls is a classic one, but I think some of the points that we're going to cover today also apply to other news events. In fact, tomorrow, after non-farm payrolls, we have other news events that are significant. And every single week, we know that the economic calendar has a variety of things going on. So I think hopefully you'll take home some points for tomorrow for non-farm payrolls as well as for the future. So when it's NFP, I mentioned this briefly at the outset of the webinar. NFP again is the abbreviation for non-farm payrolls. It's the first Friday of every month at 8:30 a.m. Eastern Standard Time, which is New York time. Okay, for any of you those who are need to do the time conversion there, that is 8:30 New York time. Okay. And let's just jump into some trading tips. Now, I'm going to bring up the platform here in just a minute where we're going to try to look at some comparables for non-farm payrolls. Certainly, every other G10 country around the world has their own employment report that comes out every month and is market moving, right? Non-farm payrolls typically tends to be the one that is the most closely followed, okay, because it tends to be the most market moving, right? And so news traders, why does somebody trade news if you break it down to its basic elements? Because many times as traders, we are tempted to trade the market when we know there's going to be the largest move in the shortest amount of time, right? And again, it goes back to that concept of price and time, right? I'm tempted to get into a trade at the best possible price I can and when it's going to move the most in my direction. Does that sound familiar to anybody when they're looking to get into a trade? It probably does for all of us. And that's why non-farm payrolls is so attractive to people, because you know going into it that there's going to be a big move. You might not have necessarily the certainty on what direction that move is going to be, and we're going to talk about that today too. But you do know that there will be very, very likely a big move. And so that's why we get involved, because what we are aware of is that if I'm on the right side of that move, and if I'm able to get in at a good price, I stand to make a good amount of money. I stand to potentially double my account in the same day, or if not double my account, make a significant amount of pips and dollars on my account. And we're well aware of that, and that's why we trade the news. And there's absolutely nothing wrong with that. What we tend to kind of forget, and sometimes not forget, but at least it's secondary, is the risk of loss that we face when we trade, because it's natural. I almost think, I used to not necessarily believe it was human nature, but I think I've been in the market now long enough, and I've talked to enough traders from around the world that I've come to believe that it is human nature to some degree, that for whatever reason we tend to put the thought of risk of loss secondary many times to the adrenaline perhaps that is attached to the thought of winning on the trade and the big amount we can win. And so it's many times not natural to think about the risk of loss first. And so you almost have to force yourself to do that when you're trading. So that's not really a tip, but that's really more of about our mindset going into the trade, or going into the trade, exactly. But the non-farm payrolls position that we are thinking of getting in. And so when we talk about risk, we also have to think about our account balance, right? When we trade news, if we are trading with a smaller sized account, okay, in the hundreds of dollars, let's say, again, nothing wrong with that, but we do want to be aware that of how many dollars we're making or losing every time the trade moves for or against us by 1 pip. Because if I'm trading in an account with, let's say, $500, I probably don't want to place a trade more than 1 contract or maximum 2 contracts, because I know how much the market can move, and if the trade doesn't work for me in my favor, I don't want to be risking too high a percentage of my account equity on this one trade. Okay, of course, if it moves in my favor, then I'm gaining. But we want to think about that flip side. So here are some tips, and I'm going to pull up the platform and the charts in a second, just to hopefully give you some context as to what we're talking about here. Okay, so one thing to do is prepare for a whipsaw. Now, for those of you who are not familiar with the term whipsaw when it comes to trading, essentially what it means is the market, when the piece of data comes out, okay, the market has a knee-jerk reaction to the data, okay? And you're going to see a spike, okay, in one direction or the other when the data comes out. we don't know exactly where that spike, what direction that spike is going to go. But I can give you some tips on traditionally what you see with whipsaws, or what I think you see more often than not. And what this requires actually is having a view of what the data release actually is before you get into the trade. Okay, and so the second tip is attached to the first tip, which is enter the trade after seeing the job figure. And so what our opinion is, and of course this is not the only way to make money trading non-farm payrolls or trading a news event. Okay, you can get into the trade before the news announcement comes out, of course, and that's ultimately your decision. But what we are looking to do here is give you what we see as being the highest probability way of making money on this news announcement. And in our estimation, your highest probability way of getting money out of the trade is not entering before the announcement comes out, rather afterwards, okay, for a couple of reasons. One, which might sound obvious, but at the end of the day, as much as we would all like to be prognosticators and have a crystal ball, none of us know ultimately where this job figure is going to come out, right? We've all been surprised. I mean, if you've been in the markets for a long time, this might apply to you. If you're brand new, maybe not. But if you've been in the markets long enough, you've seen enough pieces of, not even talking about other announcements, non-farm payrolls alone in previous months has surprised traders enough times to know that there's no person in the market, not even Warren Buffett, who can predict exactly how the non-farm payrolls number is going to come out. And that's okay. We're not trading because we think we are people that can predict the future, right? That's not our job as a trader. That's not what we're trying to prove in trading. We're trying to make money in trading, right? So we need to kind of be realistic as to what is achievable for us to do as traders. Is it achievable for me if I trade non-farm payrolls 10 months in a row, and basically, which means I'm basically going to be placing 10 trades in 10 successive months? If I try to predict, I mean, of course, there's going to be estimates and there's going to be expectations about how the data is going to come out. In this particular month, the expectation is 205,000 jobs are expected to be created. Okay, I can look at the expectations, but ultimately, if I guess 10 months in a row how non-farm payrolls is going to come out each of those 10 months, how many times am I going to get that right? Okay, if you reflect back, maybe you've done this yourself. What I tend to find is that the majority of the time, not just myself, but most traders are, you're going to be getting close a low percentage of the time, because ultimately we just don't know precisely how the announcements are going to come out. Sometimes they come out near expectations. Sometimes they come out wildly off expectations. Okay, and so this is why we advocate entering the trade after you see the job figure. Okay. Arguments for not trading after the job figure I've seen is, well, I don't want to miss the majority of the move, right? I am concerned that if I get into the trade after the news announcement comes out, that I'm going to miss out, right? Again, human nature starting to affect our trading, okay? The feeling of I might miss out, okay? Natural feeling, especially with trading, especially when we have taken our bruisings in the past, or when we've all been there in the past, not around news or not around news, where we've seen a big move, we thought about getting into the trade and we didn't do it. And then the trade actually moved in the direction we thought it was going to go in, and we wind up kicking ourselves. Guess what? Every trader goes through that. If you've been in the market long enough, it's going to happen to everybody. It's part of trading. It's part of the business. And so you can't let those previous experiences affect your mentality and ultimately result in you getting into a low probability position because of previous trades. And so let's take an example on the chart, and we'll come back to these tips once we get through this first one. So let's look at I tried to find an example this week, okay, of a news event that might resemble what we're going to see tomorrow, okay, with non-farm payrolls. And the closest one I found this week is the Australian central bank decision on interest rates. So Australia lowered interest rates earlier this week, and you can see here on May 3rd this huge candle, right? This is a an hourly chart, okay? So this shows you the range this pair made in this given hour, okay? And basically we saw Australian dollar ultimately drop 150 points, okay, from 77 roughly, actually slightly above 77, down to 75.50 roughly. So this was a 150 point move in 1 hour, okay? And there's a couple things I think that can be drawn from looking at this chart. One, and I know it's an hourly chart, so we're not looking at like a 1 minute chart or a 5 minute chart where you can see, something that, the actual tick by tick or close to tick by tick moves. But this is good enough for a couple reasons. But what if you were trading this news announcement or watching the charts at this time? What you would have seen it was the initial move after Australia cut interest rates was the Australian dollar jumped. Okay, it initially moved up above 77. Okay, before we saw this massive move downwards. And I think what this proves is a couple things. One, Australia lowered interest rates, right? Our expectation was that there was actually strong expectation that they would lower. And the intuitive thing to see was, okay, well, if they're lowering interest rates, that means there's going to be a flight out of the Australian dollar because now Australia is in continuing in a rate cut cycle, whereas the United States is in a rate hike cycle, and that's bearish for the Australian dollar. It's bullish for the U.S. dollar, and so as a result, it makes sense for this pair ultimately to fall, which it did, right? But guess what? The trader let's put ourselves in the shoes of two different traders. Both traders had that same thought process that I just described. The first trader says, okay, because I think Australia is going to lower interest rates, and because I know that that's typically weak, that's typically going to weaken the local currency, I'm going to sell Australian dollar before the announcement comes out. I'm going to sell Australian dollar, US dollar before it comes out because why? Again, that thought goes through the trader's head. I don't want to miss the move. I don't want to miss the big move downwards. The second trader thinks the same exact thing. The second trader has the same exact thought process as to why the pair should fall, but the second trader is more seasoned in trading news events. And the second trader says, I've been here before. I know I like this setup. I like the overall aspects of this setup because Australia is expected to lower interest rates. I know that that's bearish for the currency, okay, overall, but I'm not keen to get into a trade before the announcement comes out because I know around these types of announcements there can be a whipsaw, right? And I don't want to get caught on the wrong side initially, or I don't want to basically see this trade move against me for 20, 30, or 40 pips before I realize that I might have been better off waiting for the initial move against me, the what I like to call counterintuitive move. Okay, and I can't tell you how many times I've had this conversation with traders. I've been in the market on the brokerage side for over a decade, and I can tell you I've fielded, I would venture to say, in the hundreds of phone calls from traders when after an announcement comes out, speaking to a trader and they say, I don't get it. The Australia just lowered interest rates and it's moving up. Australian dollar, US dollar is moving up. I don't understand. And then my reaction would be wait 5 minutes and see what happens next. And then, most often you'll see the pair then make the intuitive move, which is in the direction of where the rates were moving, and then ultimately it moves down. And it's really the story of timing the trade, right? Price and time. The first trader is frustrated, very frustrated, because they understood what was happening, but they weren't able to get in at the price that they liked, and they weren't able, but they weren't thinking about the timing. They were thinking about the price, but not the time. Okay, and so we always have to keep price and time, both of those things, in our mind when we trade. And when it's not around news events, it's not as critical. We often can get away with it more often than we can around news events, because when the market's not very volatile, many times, okay, I wasn't able to get in. I sacrificed 10 pips, but ultimately the trade moved in my favor, and I was able to take a profit. I'm still happy. But around news events, it's much more sensitive of a topic because the market's moving so quickly, and our nerves are a little bit more on edge. And so what happens many times is that trader who's short before the announcement comes out, what you might see happen, and I've seen it happen, is that trader who's short. In this case, let's say the trader got short right here. Okay, and guess what? This is an hour roughly before the news announcement came out, or let's go right here. Trader got short at 76.90, let's say, anticipating this news announcement, right? And all kinds of thoughts go through your head. I want to get short now. It's an hour before the news announcement. I want to get short at 76.90. Why? Because what happens if in the next hour it falls to 76.80 or 76.70, and now I'm getting in at a worse price, right? We're thinking worst case scenario situations before the announcements even come out, and we're creating scenarios that haven't come to pass yet. And we never want to get into trades based on scenarios that haven't come to pass yet. We only want to trade on information that we have that's solid, right? Because again, we don't have a crystal ball. And many times, and this is behavior that you see, if you study market behavior around announcements enough, is many times when the announcement is highly probable to come out a certain way, and this was a central bank decision, mind you. This is not non-farm payroll, so they're not an exact parallel. So there's more of a certainty around a central bank lowering rates than there is around predicting how non-farm payrolls is going to come out. So they're a little bit of a different situation. But ultimately, the scenario is somewhat the same in that had I gotten short within the hour before the news announcement came out, I would have gotten short around, let's say, 76.90, and over the next 60 to 75 minutes before the announcement actually came out, what would have been going on during that stretch of time? Well, what would have been happening is I would have been watching the Australian dollar go up and up and up, right? And meanwhile, I would have been getting more frustrated and more vexed because I'm saying, wow, what's happening? Oh, why did I get in at this price? It's just moving up. Okay, now it's across 77. I didn't think that was going to happen, right? Now that it's above 77, other thoughts might go into my head. Well, maybe it's going to run up to 77.50, right? Maybe it's going to run up to 77.50, and now I didn't think I was going to be down here. I was expecting to be up. And what might I do if I get nervous enough, right? As I see the pair cross 77, I might close my trade, right? I might close my trade, and ultimately, I'm out of the position before the announcement even came out, right? Has this ever happened to anybody, in the webinar? I'm curious because I know it's happened. I've talked to enough traders to know that this has happened. And ultimately, the result of that situation is you have somebody who wanted to trade this news announcement, and they're out of the trade before the news announcement even came out, okay? Because they were trading, the timing was not high probability, the timing was low probability, and ultimately the trader deep down knows that the timing was low probability, and that's what shook them out of the trade because nervousness came in because they didn't have enough information. There wasn't enough information to have solid footing in the trade or for the confidence to be there to remain in the trade. And so that is the most frustrating situation because what you have there is a trader who got in at 76.90, and I'm again using just this Australian dollar announcement as an example to prepare people for tomorrow. Okay, you have a trader who got short at 76.90, wound up exiting the trade perhaps something like 77.10 for roughly a 20 pip loss, only to watch the pair fall ultimately back in their direction and move what ultimately was 150 points. And that can be the most frustrating thing to experience as a trader, but it also can be a great learning experience. And hopefully here you're learning you don't have to learn this firsthand. Okay, hopefully this webinar will help prepare you for NFP tomorrow and for future news events. But to me, this is a good thing to walk through because to me, it shows the rationale for why we're not advocates of getting into trades before the news announcement comes out and resisting the thought process that I want to get in the trade before the news announcement comes out because I don't want to miss out. That's not the logic behind that thought makes sense. We see why it comes up, but I'm just giving you an example now of how it can go very wrong uh, if you take that approach. You're better off, in our opinion, waiting for the news announcement to come out. Are you going to be sacrificing 5, 10, 15 pips, maybe 20 pips perhaps? Maybe. But it's ultimately worth it because if you're on the right side of the trade, there's no shortage of pips. This trade ultimately moved 150 points. Even if you missed out on 20 pips of that move, you still had well over 100 pips of profit to take home. Okay? And actually be in the trade and not out of it. Okay? Now, that goes back to our tips here, and we'll just move through the rest of these here because I know the webinar is taking, we're getting through the time here pretty quickly. So again, just to reiterate what I was covering there in that example, we were preparing for the whipsaw. Whether the announcement is non-farm payrolls or something else, we prefer to wait for the announcement to come out before we get into the trade. If we want to give ourselves the highest probability chance. The great thing about our platform is the news. You might have noticed this in our news feed in the top right of the platform. The data comes out immediately, instantaneously, and it's actually, you don't even have to click into it to see it. It'll be released here on the top right, and you can see it in real time. Okay, so get a peek. You want to know what that, you really do want to know what that data is. It will give you the confidence to stay in the subsequent trade. Okay, and that's a very important thing. And we want to remember the market many times will be counterintuitive initially. Okay, there's that phrase, buy the rumor, sell the news. A lot of times the market will move adverse to what the announcement the direction that makes sense. That's okay. Why? Because we know that happens. If we have that piece of information in our back pocket, it's a great thing to know. You're a leg up on many traders in the market just by having that piece of information in your back pocket. You're no longer going to be, or you'll hopefully never be, the trader who goes through what I just described to you in that Australian dollar example. Okay, this is that seasoned traders have seen this time and time again, where the market initially goes counterintuitively, and then whipsaws and comes back in the direction that actually makes sense based on the announcement. So let's use that to your advantage. That's a piece of information that you can use to your advantage. I can't say without fail, but it's going to work for you enough times where you'll ultimately come out on top. Okay. Be aware, another tip, be aware of other news on the calendar in the same day. Okay. And tomorrow is actually an interesting one because we have US non-farm payrolls. We also have employment data out of Canada. Okay, we have that about several hours after the US non-farm payrolls data comes out. And that's important to know, especially when it's the same type of data, because that can exacerbate certain moves that you were profitable on earlier in the day. And I know many times non-farm payrolls, especially if we have a good day, we take home our profit, why not call it a day after a couple hours? If we made 150 points or 100 points, that's a nice profit heading into the weekend. But sometimes there might even be some more left on the table there if there's other news announcements that have come out. And with Canadian dollar, it's quite interesting because we've seen some very interesting moves. Just go to let's go to a daily chart here. But Canadian dollar has moved over 425 points in the past few days, right up to 125.54. So tomorrow, if we see for example, data out of the US, if the job data does exceed 205,000 jobs, which is the expectation, okay, and the Canadian data comes out negative or worse than expected, which is also very possible, we could see dollar CAD rally well above 130 potentially. So that's just something to keep in mind. Again, notice there I have somewhat of an opinion of what's going to happen tomorrow, but I still do not want to get into the trade any time. I don't want to get long US dollar, Canadian dollar before the announcement comes out because I still want to see the data, right? I'll be much more confident in my position once I see the actual data that's come out. Okay, and I have an account balance that I want to protect, right? So I want to protect the money that I have in my account first and foremost, and then speculate on the announcement once I have more data at hand. Okay, but that is something to keep in mind. We have U.S. and Canadian employment tomorrow. So after you trade the non-farm payrolls data, if you decide to do it, just bear in mind there is more data coming out later on out of Canada on the employment side that could very likely exacerbate any move that happens earlier in the day. So there might be two shots tomorrow at taking home some nice profit rather than one. So something just to think about. And along those lines, another tip here, probably not too surprising to you, expect a 150 point or higher range tomorrow in pretty much every dollar denominated currency pair, really. We've been talking about dollar Canada, but euro US dollar has a very likely chance of making that same type of move. British pound US dollar is always, or is typically around news announcement, the most volatile. It already is the most volatile of the major currency pairs. And around news events, it's no different. So if you're really a seeker of the highest volatility mover, you might want to consider British pound, US dollar, and be aware of trader sentiment heading into the announcement. Now, if you've been into any of my other webinars, I bring up sentiment a lot. Sentiment basically refers to the ratio of long traders to short traders in any given currency pair at any given time. Okay, and it's not something that you can necessarily just pick up at any time. This is data that we have proprietary to Currency House that we can share with you and that we do share with our live clients. But around news announcements, it's particularly significant as well, because if you know that a certain amount, let's say in that example where we talked about the US dollar, Canadian dollar, if we really see that start to jump in the 15, 20 minutes after the announcement comes out, and you know that the majority of traders, for example, are short that currency pair, which right now many are, then as the pair moves up, you have a lot of stop orders that are being triggered, which is going to fuel the move even faster, higher. So that's why it's another reason to tune in with us, not just in this webinar. We are going to be introducing live trading sessions around these news events. So what we're going to do in those, and I'll jump to the last slide here because I think this is where it's best to be mentioned, is we will be doing a live session tomorrow around non-farm payrolls. This will drive basically, hopefully, the concepts we've been talking about today home. Okay, and we're going to be doing more of these, by the way, but we definitely want to make sure that we mention tomorrow since it's so close. And basically what this is a webinar similar to what we're doing now, but we're looking at the chart and the pricing right around the news announcement. We're going to be discussing how it came out, giving you that piece of data. You can see it on the platform, like I mentioned. We'll be mentioning it verbally over the webinar. It is for live account holders with a minimum account of $500. So it's a low barrier to get into the live session, and this is becoming more popular. The reason why we've been starting to do this is because, as I hinted at earlier, we actually take quite a high number of phone calls around these news announcements, and people touch base with us because of the level of activity around the announcement. And so we wanted to really reward traders who are following the market so closely, paying attention to these announcements, trading them, and really looking to do well around them. So if you'd like to get into this live session tomorrow at the time of the release, if you already have an account with that amount, you're welcome to join. We'll make sure you get in. If you don't, you just have to get the account set up by tomorrow with a minimum of that amount, and you're welcome to come into the webinar. And what we also release in the session, okay, is what I mentioned earlier, the sentiment positioning information. So basically, that ratio of longs to shorts. As I said earlier, the more information you have in your back pocket around these news announcements, the more prepared you are. It's like weapons in your arsenal. The more that you have, the more emboldened you'll be to get into trades, to get into a trade that you're confident in, to stay in the trade, okay, and to maximize the trade. Right, and get the maximum possible pips that you can get out of the trade. Okay, that's what we all would like to do, right? And what helps us accomplish that moving forward for tomorrow and for future news events is having as much information at your disposal as possible. So we'll get you that news release on the spot right at the time of the announcement. Beforehand, we'll let you know trader positioning. So we'll let you know basically the ratio of longs to shorts. So if 70% of traders that we see are short dollar CAD as an example, and 30% are long, we'll let you know that. Okay, that will be valuable information because if non-farm payrolls comes out strong, and we see, let's say, 220,000 jobs being created hypothetically, which would be 15,000 over expectations, Okay, we can see dollar CAD zip through 130, and then now we're back. Guess what? Dollar CAD earlier in the year, I don't know how many of you have been following it. Dollar CAD earlier in the year got up to 140, and if you look at the time frame between when it went crossed 130 and it got to 140, it was a very short period of time for a currency pair to run 1,000 pips. And we have quite a few Canadian clients, and I know our Canadian clients certainly know what I'm talking about, because after it crossed 130, I remember speaking to colleagues in our office like, "Oh wow, dollar Canada broke 130," and it felt like it didn't feel very long at all before we were having the conversation. Well, now it's at 140. That's 1,000 points on one contract, one mini contract. That's $1,000, and so we're paying attention to that pair in particular. Tomorrow will be a big determinant with both the U.S. data and the Canadian data as to whether we're going to get back over 130. And if we do, if history repeats itself, and if we see oil in particular start to dip a little bit, which many are expecting, we've seen an oversupply again, more of a glut in the oil market recently. Okay, we reached 140 very quickly the last time after we crossed 130, and that's something to keep in mind. Sentiment will help inform us how quickly that might happen, right? If we see a very high percentage are short and we cross 130, what do I figure? I figure that we're going to see a lot of stop orders being triggered on those short positions, and the run up to 135, the run up to 140 can happen very rapidly. And I want to be on the correct side of that if it does happen. And that whole process could very likely start tomorrow with the release of this data, okay, and what it tells us. So if you want to get in on that event tomorrow, send me an email. I'll make sure that we get you set up beforehand so that you're locked in. You can email me at dan@currencyhouse.com. Or you can also always reach me on Skype at @danperry. I get many different Skype messages from traders, but I do. I definitely will not miss it if it's about just the seat reservation. And if you have any questions about the market or want to chat, I always will get back to you, definitely within the same day at the latest. Okay. So with that, folks, we are just about out of time. We're going to wrap it up. Hopefully, this has been informative. As I say here, retaining new knowledge, the best way. Hopefully, you learned something in today's webinar. I can tell you, if you're in tomorrow's webinar, you'll learn even more. Okay, because new knowledge comes, and I've learned this myself, the best way possible through trading live. The live trading environment, you retain more information because you have skin in the game, as they say. And win, lose, or draw, you retain more information faster, and you're more prepared. Hopefully, we all want to make money tomorrow, of course, but you'll be ever the more prepared for the next news announcement that comes out next week and the weeks that follow. So with that, we're going to wrap it up. Thanks for coming in. Hope to hear from you soon, either by email or Skype. Any other questions that you might have on your mind regarding anything, also let me know. Okay? Thanks, folks. Have a great day, and hope to see you tomorrow in our webinar. Take care.